let's start off here with this idea of getting back down to 2%. There's so much focus on that as to what more the Fed has to do. But more importantly, is that a realistic goal right now?
Well, if you mean right now, this year, I don't think it's a realistic goal. I think over time, it certainly is a realistic goal.
Yeah.
I think the only question is how much pain is that going to imply in terms of weakening in the labor market. And that was certainly something he was getting a lot of pretty tough questions on. I think he didn't want to rightfully answer that.
Yeah.
But I think getting to 2% is not the question. It's how long does it take and how much pain does it imply?
How much pain have we seen so far in the economy? Because when we look at the aggregate data, it's hard to really see it.
Almost none, right?
Yeah.
Certainly in the labor market, you're seeing the opposite of pain. You're seeing wage gains continue to be robust, job growth continue to be well above the sustainable rate. So we haven't really seen any pain yet in the labor market. Maybe in the housing market, but even there, construction employment is still at its cycle high.
Yeah, I mean, it hurts if you're a home owner or home buyer, but if you're a home builder, you're doing great.
Or if you want to buy a home, you better do it maybe in the next 2 days, right? Or last year, before this jobs report comes out. How much more importance does this put on the jobs report on Friday and next Tuesday's CPI report? Your eyes are getting bigger.
A lot more important, right? It seemed like, so you mentioned, I think we got two messages today. One is that the terminal rate's going to be higher than we thought in December.
Right.
But I think we kind of knew that coming into today.
Yeah.
I think what was more surprising is that he's kind of got his eye on perhaps dialing it back up to 50 in March, and that the totality of the data you mentioned is really the totality of January and February. Well, we know what the January data was. It was strong, so we really need the February data to be at the least, much, back to where we were in the fourth quarter and perhaps reversing some of that strength we saw in February. So definitely the next few days, payrolls, of course, on Friday. Chair Powell really places a lot of importance on JOLTS, which we get tomorrow.
Yeah.
And then next week we'll get the CPI. So I think those reports are really going to, decide here what we get in the March meeting.
You mentioned 50 basis points. Is 50 basis points in March now the default unless they are convinced by the data otherwise?
So the market certainly seems to be there. We haven't yet flipped the switch there because we want to see this data, but it does feel like it's going to be kind of hard for Powell to walk that back without the data being not just, in line, but perhaps a bit weaker than people are expecting.